Good afternoon, traders. This is Christian Farmer. It's Tropic Trade Group, and this is your end of day market recap for Tuesday, February 25th. Well, the good and the bad for the day. I think you're probably going to notice more bad on your screen. Many areas went down again, more from the open than anything else. There was a couple bright spots for the day. So I will get into that. As always, we'll try to give you the overall view of the market and what's going on as well under the hood. Risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. Everything that we're going through is for information purposes only. So let's talk about a couple, being that I think that there's a lot of developments today. There's a lot of movers today. It finally did feel like there was some fear in the market too, something that we really haven't had, since we've started to kind of move lower over the last over the last week. I guess it's been right. It really hasn't been too much of cause of concern. If when you look at the equity put call ratio, there's been no spike in puts. Today, it felt like people were, I don't want to say I don't like to use the word panicky, but it just felt like people were starting to say, hey, I need exposure. And usually that's when there hasn't been a move yet in the market's like at its highs or in a range and we start to see a lot of put buying, that could be a good signal. But once we've already had like two, three, four down days in a row, and you start to see a lot of put activity, that's usually a contrarian signal. So I'll have to see tomorrow. I don't know what the number was for the equity put call ratio, but it just felt like in the first hour or so I was seeing the tape with boom, 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 like a lot of put activity. So to me, that's just that is part of the process of a market dip. Whenever we have a market dip, and I think now you can kind of say that this is one, right? They're always a bit scary because first of all, things right now I think are moving very quickly, and that's a bit scary, especially when you look at the momentum stocks, which I think at one point I tweeted this earlier, but I think depending on what momentum group that you look at, I think the ARK Innovation ETF has lost 15% in the last 5 trading days. So I will bring that up for you just so that you could see. And I think they were talking about that on CNBC. They were talking about there is a specific momentum ETF, but I tend to look at this one. And if we just bring up the data for the last few days, if you go back to the 14th, right? So Valentine's Day, which was uh, a Friday or two ago. You could see, yeah, it's this is the IBD 50, and I hope that you could see this. If not, I will enlarge this just so that you could see. So, I mean, it's 1, 2, 3, 4, 5, 6 down days in a row, and that's 16%. I mean, the average stock is not down that much, because there's a lot of rotation within the S&P. But if you look at the ARK Innovation ETF 2, that is down. That is down 16.4%. And same type of thing here. So just a lot of profit taking in momentum and a lot of growth names. Yeah, and here is, by the way, the momentum ETF. It's not down nearly as much. It's down 5%. So, again, so what all of this illustrates is that there's been a decent correction, especially in growth names and momentum names. Now, you could argue, as I've been doing over the last couple of days, that many names just got way ahead of themselves, and there was no reason, and they were due for a pullback. And to me, again, I don't want to really belabor the point here. But your Palantir, your hymns, these things just went ballistic to the upside. And I'll tell you, we see this from time to time, and it doesn't mean that the market is crashing. So, for example, like where have we seen that previously? Well, we've seen it in cannabis stocks. We've seen it in blockchain stocks. We just this happens, and from time to time, the market needs a correction to get that froth out of the way, and that's exactly what we've had. So, I've heard some things like we things kind of like capitulated to the upside. Yeah, maybe for those groups. Like, and again, I'm sorry, like I don't think Hims that sells fat loss pills and PP pills, and I mean I'm sorry. Listen, we got to joke around a little bit with this stuff, but I mean, come on, really? Like, you really think that Hims is you could go to the drugstore? Like, well, I guess you can. But in any event, let me go. Let me get back on track because I do think a lot of that's this stuff is silly. Now, you may be a fan. Like, whenever I've done this type of thing before, whoa, what happened here? Whenever I've talked about stocks that go up too much, right? I always get some pushback and people get mad at me because, there's a lot of passion in those stocks. So here's something that I thought was interesting for the day. This is IWM. Again, a lot of people for whatever reason thinking that it was going to be IWM's year, the small caps year. I didn't agree with that. But here we are, and again, like, this may sort itself out, but for now, you've got to close below the 200-day moving average here. And that's the first time that that's happened since basically November of 2023. So this has not been a great area to be in. Could it, the year is still young, and I'm not saying that this is going to outperform, but maybe it gets back into the range. The level that I would watch there is 218.45. So interesting development there. Let's talk about a few of the other developments. Okay, so the Qs, and again, this happened very fast. I didn't even think that this was going to happen by the end of February, but here you are, three down days, and you get to the bottom of the value area. A lot of volume too in this. So that bearish 80% rule that we talked about in my midday notes in Substack, which you can get involved in. Where can you get involved in Substack, by the way? And you can get this stuff for free. And of course, if you want to see positions and watch lists and charts and all that, you can pay $20 a month, which is nothing. It's ttgtrading.substack.com. So again, that's right here on your screen. I know it's difficult to read, so that's ttgtrading.substack.com. Again, it's most of what you get is, or half of the note is for free. So you could definitely check it out. And what I try to do is just give people a snapshot of what's going on in the day. I give people what the high lows are, and and look at the so before I move to one subject to another, because there's a lot to talk about and I'm trying to talk quickly, but that rule is complete. Now I would watch 5, 10, 11, right? And basically we're just back to the bottom of the range. So is this a market crash or anything like that? No, it's a correction. And, again, I'm just trying to put things in perspective. We talked about how the end of February is very seasonally weak. That's what we have on our hands. And we have a dip, and in some things a correction. And you're going to get you usually get two of those, two, maybe possibly three. We've been kind of blessed the last couple of years where I think we've had one year and maybe two another year over the last 2 years, but you're going to have like 10% corrections, right? That is normal in any year, right? I know we've kind of lost the muscle memory of having corrections, but they happen, right? And it doesn't matter who's president. It doesn't matter, if the administration is Republican or Democrat. You're supposed to get a couple corrections a year, which are 10% to the downside. It shakes things up. It clears out the sediment, which I believe, I'm sorry, these like day trading sediment surveys, which people drool over, I think are dumb, because I think people change their mind when the wind blows. But I think that there's been a lot of frothiness, and you could look at things like Helene Meisler tweets out every weekend. She has a chart fest that she tweets out with the city panic euphoria model. That thing's been pinned towards euphoria for like the last 3-4 months. So this sentiment has been super hot. All right, so let's keep going here. SPY, by the way, almost actually filled its. I would call this just about. It came within a hair. You could see that the value area is still pink, and it still says bearish monthly 80% roll, but we came very close to taking that out. Now, there's definitely, and again, I'm not trying to take what we're seeing lightly, but I just find it's logical, right, that we're seeing a weak time, we're seeing weak market action where the seasonality tells us that it's weak. So this could very well be a buying opportunity. So let's go through a couple charts. Before I do that, I want to make sure I'm covering everything. But here's TLT, right? TLT made another big move. Now, again, like this is not such a bad, like when you really kind of dig into this. Yes, this is risk off right now. Consumer staples going up, risk off. Utilities going up, a bit risk off, and so on and so forth. But this is actually, it takes the pressure off stocks, being that we now have a rate, right? Remember, when TLT goes up, that means bonds are going down. That means bond yields are going down. But here's what we have, and again, I'll zoom in here. I'm sorry about that. So here's what we have in terms of yields. If you want to look, I know a lot of people like to quote the 10-year yields, but we're now at 4.3. Where did this thing top out at? 4.8. So, this has really come down. I don't know if we go 5 years. Again, still kind of in a range, but we're way off the highs, right, of where we hit. And this was back in 2023 where we peaked out too. So I think that this is good. The bullish 80% rule is in effect for TLT. That's the top of value is about another 2.8% up, which is not the highs from last year, but would fulfill the bullish 80% rule. Let's also just talk about the VIX. The VIX, reached, I think, somewhere around 21 today. So I like to see these things, so once we have some volatility, right, I have a whole different like groups and sets of factors that I tend to look at. So take a look at what the VIX did today, right? It hit this 21 level, but I always tend to look for these toppy looking candles after we've had some volatility. Now, we've had more in certain places, but if you go through, you're going to find that sometimes you'll see these toppy looking long wicks and then volatility comes back in. Is that enough of one for today? Possibly. Again, this is about probabilities. We don't have any sure things, right? We're just basically taking the weight of the evidence here, right? And we go through these factors one by one. Here's so make sure this changed. Here's the VVIX, which is the volatility of the VIX itself. Same thing. We want to see big toppy looking candles. We're starting to see so this went higher during the day, but it's not closing there, and it's not giving you a full bar here. So again, I think that we might see volatility kind of come in as the week wraps up a little bit. That's I don't think that we go to a VIX of like a 30 or 40. I just don't think that there's that much going on here. I think that there's a lot of profit taking. I think a lot of things went too far to the upside. All right, so I mentioned I would talk about some charts. For some single stocks, take a look at Meta, for example, right? I didn't want to buy this thing when it was, up 17, 18, and actually up went 20 days, but now you're into some support. So I know that there's been some stocks that the support has not held, right? But I would watch what's going on here in Meta, right into the top of the value area. So again, it's retraced a good portion of this move. The red candles go down faster than the green ones went up. But I think that that's pretty interesting, right? App loving, right? Now, again, probably needs a little bit more time, but look at this thing. It just returns to the top of the value area. It also filled the earnings gap, which in my opinion was ridiculous. For a stock to go up 370 to 500, yes, they're making money. Their growth has increased, but that's too much of a move. So that's one on my list. What about some of the cyber stocks? Right, this is one on our watch list. This is another one. Now this went past the gap up, but look at where it is. Right into support. So 360. And again, this doesn't mean these are levels of interest. It doesn't mean like these levels have to hold, right? If there's many, many, many more sellers than there are buyers, you're going to break support, right? But this is an area where buyers could show up. I tweeted this one earlier, and I get that some people aren't familiar with my indicators and using volume at price, but here's Amazon. If I could bring up Amazon. Amazon seems to be stuck on this chart. Let's see. Let's try again. It's not working. Let me try something. All right, so I got the Amazon chart up. Now, again, it's a bit oversold here to the downside, and I did go long Amazon here on the dip. 204.83 was a downside VPOC takeout. Why is that important? And somebody asked me on Twitter, they're like, and I pointed right at it. I'm like, here's the level. They're like, what's the level? I'm like, it doesn't have to be exact. Like, you got to get away from these things. So people like to have the exact to the penny. It doesn't work like that in trading. A lot of times things overshoot and so on and so forth. But I would watch the low of, quite simply, we could just watch the low of today. But here's a demand area. Now this thing is over, I believe it's oversold a little bit, probably due for a bounce, maybe up to 216. Now then you can watch what happens once it gets to the bottom of the value area, as well as the 5-day moving average. But it's pretty decently down here. And these will basically tell you where there's a lot of the Virgin point of controls will tell you where there's a lot of volume previously that we have not revisited, right? They represent possible demand when it's below and supply when it's overhead, right? So that perfectly, worked pretty well. Let me show you just a couple other names that, the insurance names have been acting really well. What I thought was very interesting today was when I looked at the 4-week new highs versus new lows in the S&P, and I think I have this up here. Right? It's almost 1 for 1. I think the new lows outweighed a little bit. Now it is a bit concerning because you've got more tech, right? Like I had talked about yesterday, there's more tech that's making new 52-week lows than I think anything else. There's only a couple new highs, 4-week new highs in tech, right? And it's also staples are dominating here. There's a lot of utilities and REITs, a lot of interest rate sensitive areas. Well, that's what happens sometimes when TLT moves up. Very little consumer discretionary too. So consumer staples are going up faster, much faster than what consumer discretionary is right now. But there are still names going up. This is not a breakdown in the market. There's a lot of rotation under the hood. And I was going to just mention Home Depot, which I thought that this was encouraging. Now, it didn't close on the highs. I didn't trade Home Depot. But again, a lot of times I use stocks for basically proxies, right? And I know like the home builders did well today. Again, interest rates helping. You're going to need to see housing demand too. But for now, it's holding where it needs to, which is the bottom of the value area. Would I go long here? I mean, I guess if you want to go long things that are not really in a major trend other than sideways, sure, you could go long versus 98, 85, but I think it's not going to be an easy path for the home builders. All right, considering that you need a lot of money to buy a home, and right now consumer confidence is going down. Speaking of which, here was the data points today, right? This is kind of what set off another round or another move to the downside, is that consumer confidence is really waning. And we've seen this now with multiple surveys. We've seen this with this consumer confidence. We've seen it with the Institute of Michigan data as well. And there's where we are. It's not breaking down as much as it was in 2020, but you could see it's definitely moving down, and it's moving down pretty quickly. What else was I going to cover? One other name, Walmart, which reported earnings a couple days ago, had a downside move. Well, look at buyers like this name, right? Investors like this name, and this is an example of hitting a downside VPOC. We went a little bit lower, and prices right back. I went long some Costco. That's one of my favorite companies. It found the 20-day moving average and bounced. Right. Another one, which is a little bit cheaper, right, is BJ Wholesalers. Also, not a bad looking chart here, getting back above the 20-day moving average. So something's blasted through the 20-day moving average, right, and support. Other things are holding in there quite well, right? And I think you want to take note of that, right? And another thing that I've heard a lot is, oh my God, like all the previous leaders, right? They've all fallen apart. Well, what happens is sometimes stock acts as leaders for 6 months, and then they don't anymore, right? That's just part of the market, guys. And another group runs with the ball, and they become the market leader for months. Was this confusing to see a lot of good earnings, a lot of good earnings reactions, and then prices come all the way back in? Yeah, it's a bit confusing, right? When you see that, but I really think some of those names just went too far too fast to the upside, and we're due for a correction. That's it for today's video. Have a great night. Hope this helped. If you liked the video, like the video, and subscribe to the YouTube channel and all that stuff. Have a great night, everybody. See you tomorrow.